Buckle up your seatbelts, folks, because we're still in this kangaroo market. Despite two kind of Friday, it was a little bit of a rally, not really. Despite 2 days of rally and some optimism and some recovery, we're still in a kangaroo market. We had good economic data. Yes, we had some optimism about a stimulus package that would involve a lot of infrastructure and lead to long-term improvements to GDP and long-term job recovery and long-term wage increases. That is all true. And in the long term, we will have a long-term bull run. I'm not saying anything about the long-term bull run. What I'm talking about is the next 1 to 2 months, maybe, as we wait for the economy to catch up to the market, we're going to be in this kangaroo market. It's going to be a lot of these waves. It's going to look like the mid-April to mid-May period. Lots of peaks and valleys and peaks and troughs. Right now, we're not trading or investing on the long-term thesis. We are trading and investing on the reopening news, on the rising case news, on the retail sales numbers, on the new possible drug that might work. That's what's driving the market right now. Those are all things that happened like today, yesterday, whatever, in the past week. And that's what's moving the market. And each one of these headlines, it's just a headline comes across the tape. A headline comes across the tape. Moves the market dramatically. And this is the kind of environment we're going to be stuck in for a while, because there's still, despite the 10% over the expectations, retail sales numbers, despite record home builders, the 58 whatever on that index being a fantastic number, despite all that data, we are still at a disconnect between the market and the economy. The economy, yes, it's recovering, and it's recovering very well, and we should be very optimistic about that. But the market has rallied very aggressively, and it's rallied on the understanding that the economy will recover well. So that's happening, but we're at the peak. We're at almost where we were before COVID. So now we got to wait for the economy to catch up, because there was a little bit of a sell-off today. There was definitely a big intraday pullback when Powell said, yes, the economy is recovering well. We see the data. We're not going to deny the data. But to get back to pre-February levels, that's a big ask. And I understand that. AT&T came out and said today they were going to lay off 3,000 workers. There are a lot of companies who have laid off lots of workers across the board. A lot of companies have been using COVID as an excuse to just trim or to improve margins, get rid of fringe workers, all these kinds of things. And as more people work from home, as e-commerce becomes a bigger thing, I don't know if we're going to get back to 3.5% unemployment so quickly. That's doesn't seem like it's on the cards for a while. So given that, we can't necessarily get back to where we were in the economy before. Now, that doesn't mean we can't have a disconnect between the economy and the stock market. There's apparently a record amount of cash on the sidelines. And we've gotten to this level with 53% of fund managers believing this is a bear market rally, not even a new bull market, a bear market rally. So if it turns out that this rally is justified, there's more leg room for it to go. And even with the disconnect between the market and the economy, in the long term. Now, we will discuss a possible bubble that could come as valuations and multiples get too large. But right now, multiples are in the contraction mode as the economy does recover. The economy is recovering. There's just doubts of whether or not it's going to get back to the level it was at anytime soon because unemployment. Now, I don't want to be a pessimist, okay? I'm an overall U.S. economy, U.S. mentality, hardworking, Trumpism optimist. But a couple things need to happen. One, we need this infrastructure package. There are canals and dams and even highways that hinder GDP. One bridge can take 3 hours, 4 hours off of a trucker's trip, which will get goods back and forth much more quickly, which will allow more exports, more deliveries, faster, and all that. And if you can take 3 to 4 hours off of one trip, all right, that has some effect for one driver for each trip he has to do throughout the year. And then you multiply it by all the truck drivers that will be going over that bridge over the year, over the decade. That's a massive effect of one bridge. And then we're talking about $1 trillion worth of bridges and dams. When a dam breaks down, okay, ships bring massive amounts of cargo. But we've got dams that were made 30 years ago, 100 years ago, not 30 years ago, 100 years ago, and they break down. When they break down, there's a massive line of ships with millions and millions and tens of millions of dollars worth of cargo. And these dams aren't that good. They weren't built for modern day ships. So they have to remove, before they even go towards the dam, $1 million, $2 million, $3 million worth of cargo from the ship, so it doesn't weigh down on the water too much. So this infrastructure thing, not only will it bring a lot of jobs in, but the GDP impact it will have is incredible. So there are reasons to be optimistic, but a lot of things need to happen. You know, it's a lot of things need to happen, and they can happen, and we can get back to that 3.5% unemployment. We will get there. It's just there's a disconnect between the stock market and the economy. And while the economy is recovering, that disconnect still does exist. And there are concerns of whether or not they can even connect. You know, 3.5% unemployment, that's where we need to get back if we want to get back to the levels we were at pre-COVID. So there are ways for it to get there, but we just got to sit tight because there's going to be a waiting period. And that waiting period means we're going to be in this kangaroo market. So fasten your seatbelt, be a long-term investor, and sit pretty as things come out. You know, you got to take this disconnect in mind and decide what's going to win out and what isn't affected and all of that, and then you can beat the market. I have no doubt you can beat the market if you play it right. So until next time, until tomorrow, peace.